And so speaking of roller coaster rides, in today's middle stanza, I'm going to talk about what looked like an absolute blast of a roller coaster ride to be on this past week. Of course, I am talking about Wall Street Bets, Reddit, Gamestop, and Stonks. Now, I don't know exactly where the whole stonks thing as a word got started, but I think that at the end of the year when Webster's adds additional words to the English language dictionary, as they do every year, I think that stonks is going to have to be right at the top of the list. It's a very funny word, and it's a lot of fun to say. Just say it with me. Stonks. Stonks. It's infectious. And something else that was infectious was the way that the whole GameStop, AMC, all of these different these shorted stocks had really managed to turn the entire financial world upside down this past week. Just watching that happen was an exhilarating thing. Now, if anybody out there isn't familiar with this story, I'll fill you in very briefly. The way that it kind of worked out was that there was a Reddit page called Wall Street Bets. And what they were doing was they were paying attention to different stocks that various hedge fund brokers were looking at and looking at shorting. And so shorting is something that hedge funds do when when they pick out a particular stock that they think is overpriced. And so then what they do is they go out and they find somebody who has a lot of this stock, and basically they borrow it. They have that stock transferred to their portfolio, and basically what they say is that they tell this person that what they're going to do is they're going to take that and they're going to sell it. And then at a certain point down the road, after more people are selling and that drives down the price, they'll buy it back at that lower price, and they'll give the person who originally owned the stock, they'll give them back the stock, and plus they'll give them 10% of whatever it is that the profit was from the two transactions. Now, there are a lot of people out there that don't like the people that do this. They look at it as a bit of a scumbag practice. They look at it as not really being engaged in the market in good faith. They're actually out there trying to cause people to lose money and then just predating off of them. And I think that to some extent there is some of that goes on. Really, there are two different types of hedge fund operators. I mean, hedge funds, they don't have what I would consider to be a very good reputation, in the common parlance. But what people really need to understand about hedge funds is that really there are two different types of them. And so there is one type of it where people are going out and they're doing this with stocks that really are overvalued. Really competent stocks that are priced too highly based on how well that company is actually performing fiscally. And to me, I don't really view that personally. I personally don't view that as an inherently dishonest practice to be in. I kind of view that as guys that have figured out a way to make money off of what you would call a market correction. And if you can figure out how to do something like that, well then really, all the more power to you. But then on the other side of the coin, there are also the guys that are predatory. And so they'll go out and they're not really looking for companies that are underperforming per se, but what they're looking for are companies that are vulnerable. So then they'll go out and they'll do this, and they'll basically take what is otherwise a well-performing company and just cut their throat. And to me, that is an absolutely reprehensible practice, and yeah, there is a lot of that. And those are the guys that have given hedge funds the kind of reputation that they have in the common parlance. Those guys that do that particular thing, in particular, the sight of those guys losing a whole bunch of money, those guys losing billions of dollars, to me, that's a beautiful sight. I actually do enjoy seeing that. But I do think that it's a shame to see some of these guys who are actually doing what you would consider to be an otherwise honest market correction via the stock market. Well, I think that's a shame to see those guys burn along with the predatory guys. But that's kind of the thing about life, is it's not perfect, and sometimes, sometimes the results just don't turn out to be fair. And that's at the best of times. And what happened after all of this stuff was going on is actually, life isn't always fair in the ugliest sense of it. And so there were all kinds of people that were out there, and basically they were able to seize on an opportunity. Either they were part of the planning of this whole thing, where they were on this Reddit and they were saying that, we're going to go out and we're going to screw these guys. going to screw these guys over by buying into this particular stock and driving the price up, so that in fact they're going to lose an awful lot of money when they have to buy that stock back. I mean, I don't know about you, but in my view, I don't really see that as being any more dishonest. I don't see that as being any more dishonest than the predatory hedge fund guys that were going to be screwed by this, that were really the target of this whole thing. Now, unfortunately, what a lot of the people that got involved in this whole thing actually learned the hard way is that, one thing about finance is that the hedge fund guys, they do have richer and more powerful friends than you do. And they play dirtier than you do. And they're willing to do that. And so one thing that happened actually pretty quickly after that was that there were different financial services that actually started to kind of game the system to try to shut this whole thing down. In particular, I think the one that was the most famously dirty was the Robinhood app, which was a very, they made a very appealing promise to a lot of people who otherwise might not have ever got involved in the market. And they just basically said that we're going to give you the tools and the ability to trade on your own, to not have to pay people fees, and to otherwise, and to get into the market when otherwise a lot of these people wouldn't. But then when a lot of these hedge fund guys, when they started to lose money, what they did was they kind of leaned over on the people running this Robinhood app, and they said to them, well, you have to do something about this. And faced with the decision between, acting in the best interest of a bunch of hedge fund guys or acting in the best interest of their customers, well, the hedge fund guys, they have a lot more money and a lot more power than the other customers do, than these other investors do. And so, lo and behold, surprise, surprise, who did they side with? Gee, go figure. They sided with the hedge fund guys. Nobody could have seen that coming. But I think that in all honesty, even if you saw it coming, I don't think that anybody actually could have seen that coming. I mean, I was being sarcastic a minute ago, but I don't think that anybody could have actually seen it coming in quite the way that it did actually come. And so there have been all kinds of allegations where people have said that they were locked out of their app, and that this app was doing transactions with these particular stonks without their consent. There are a lot of people who've reported that that the app had actually basically sold that stonk for them. Had basically taken all this and said that we're selling this on your behalf without your permission, but we're doing it for your protection. And of course, the last thing that they were doing that for was the protection of anybody other than these hedge fund guys that they were basically acting at the behest of. So if anybody out there actually thought that these, the people that were running this Robinhood app, this Robinhood service, that they were actually on their side, I'm sorry to have to tell you that, that very much was not the case. So at its peak, the price for Gamestop Stonks hit $490 US, so almost $500 US. There had been some chicanery up to that point, but in all honesty, nothing like what followed. As of the recording of this podcast, GameStop Stonk is trading at approximately $60 US per share. And so there did have to be an awful lot of chicanery to get the price all the way down to $60 from $490. Chicanery is a pretty good word. I want to use it as often as I can while I can. But I'm not really going to go into great detail about that because there are other places where you can hear that better than I can tell you that. There are people who know more about this kind of thing than I know, and they can fill you in on exactly how dirty the game got. But what I am going to talk about here is something that has actually been kind of very much overlooked, and in my opinion, there has to be, there was some chicanery to get the price all the way down from there. But there were also a lot of people that were just flat out making honest transactions with that stock. People who had looked at a very, very high price, kind of had wind of what was coming down the track, and so they basically decided that $490 was their time to sell. Down to $450, that's their time to sell. Down to $400, that's their time to sell. And in all honesty, I think that once that stock got up to almost $500 per stock, a stock that a lot of these people actually bought into at $7 per share, pardon me. That was the smart time to sell. But there were a lot of people that were involved in this, and they were basically telling people to hold, or in the in the internet in the internet lingo, hodl. You look at it like a typo. Instead of hold, it's hodling. Right? And so there were a lot of people that were saying, hodl this stock, no matter what. We're going to screw these hedge fund guys. And that's the only reason why we're doing this. So hodl this stock, no matter what. And I think that when you look at the way that the price trend of this particular stonk has gone, in particular over the last few days, I think that you have to conclude one thing in particular, is that there were very likely people that were on there telling people to hodl that stock that were not themselves hodling. They were selling. And they were trying to get people to hodl that stock so that they themselves could sell at a better price. And the people that were hodling the stock, eventually they were going to wind up with something that was either worthless or something that they lost money on. And right now, with that stock at right around $60 per share, it got as high as $490. So to get to $490, that means that people had to buy at $450, people had to buy at $400, people had to buy at $350, $300, and so on. That's how these stocks keep increasing in price. And so there are people right now that are still standing around holding this stock that have lost an awful lot of money on it. And let's make no mistake about this, part of the reason why they managed to lose so much money on that is because of some chicanery on behalf of services like Robinhood and others beside it. But one of the other reasons was that because people that they were listening to, in all honesty, just weren't playing straight with them. They were telling them to do one thing and then going on and doing another thing. And the difference in those two things was of benefit of the people that were doing the thing that they were telling other people not to do. And to me, that is absolutely maddening, to know that there were all sorts of people who got into this, with all kinds of different motivations. I mean, you could not really say that the motivation of somebody who just got into this thing just to screw over some hedge fund guys, you can't really say that their motivations are pure. But you also can't say that they deserved to lose all that money. And in the end, what actually happened was something that I think it either was not the idea or it should not have been the idea. I mean, like I said, a bunch of predatory hedge fund guys lose a lot of money. Yeah, that's fine. That doesn't really bother me. I'm not going to pretend like my motives are pure as driven snow, that there's no malice in it. I mean, there is a little bit of malice in it, but you know what? You love to see it. In all honesty, a bunch of predatory hedge fund guys lose billions of dollars, hopefully go broke themselves, maybe go broke themselves. You love to see it. But a whole bunch of other people who are not these hedge fund people, they also go broke. You hate to see it. And unfortunately, there were quite a few people out there who were they were selling a bill of goods to the people that they were giving advice to. And it wasn't just the Robinhood people, and it wasn't just all these other financiers that were pulling strings to get this thing undercut. It was literally the people that were telling them that, hey, if we band together, then we can do some justice. And in the end, it is pretty obvious to me that a lot of these people, they didn't stick with that whole idea of doing justice. They got what they could into their pockets while the getting was good. And so if anybody listening to this did buy any of these particular stonks, I mean, it wasn't just Gamestop, it was apparently also AMC. I believe BlackBerry was another one of them that was subject to this. And if you did buy those stonks, I hope that you sold while the getting was good and that you got your money back. I hope that you made some money off of this. I really hope that you didn't lose money off of this. Because I do think that it's obvious that some of the people who said that they were in this with you were not in this with you. They were in this for themselves. And at the end of the day, they acted in that spirit. And I just hope that they didn't successfully burn you.